Let me try to fix that. How about now? Yes, we're good. All right, great. Okay, so now that we overcome this technicality, let me check on the chat. Watching from Nairobi, Kenya. Hello. Uganda. Hello, guys. All good now. Yes, thank you, guys. All right. Okay. So let's start on what's happening on the economic calendar. I want to stress before we begin that whatever I will talk about today, it's my personal opinion. It's not in any way, shape, or form representing Exness as a company. It's just my personal opinion, personal way of thinking, etc. All right. Now, so what we had this week, by the way, for those of you who are not aware, we have the US government shutdown. That means that, and it's still in shutdown mode. So, what that means is that anything that has to do with government bodies, um, labor statistics, anything that comes in forms of data are all postponed, meaning we should have inflation data coming up on Wednesday. That's cancelled. Some other data coming from the US, as you see here, housing starts, PPI, retail sales, no time. That means it got postponed. Last week we were supposed to have sorry the early this month we were supposed to have they removed it. Yeah, anyway, we are supposed to have the NFP labor data and all of that, but that got postponed due to the shutdown. That's why we don't have anything coming from the US. So yeah, that's the main reason behind it. All right, now what we had this week, on Monday we had the some Chinese data, balance of trade, exports and imports. Exports came in higher than expected, and imports as well, way higher than expected. We've seen what's happening with Trump's trade war, let's say, quote unquote, threatening China with tariffs. So that's a main driver behind market volatility this week and late last week. So we'll get to that when we're going to be checking on charts. All right. So yesterday we had, not yesterday, but early this morning we had UK unemployment rate came out higher than expected. It was expected to come out at 4.7, came out at 4.8. Significant news, yes. Moving market moving, sometimes no, especially when it comes to unemployment from the UK, because it's for the month of August. We're already midway through October, so August data not that significant. However, since we have a surprise, even though just 0.1, we're gonna see how it affected the British pound. The British pound against some major pairs, especially the US dollar. All right. And also, what I wanted to mention here about British unemployment is that, as we can see, it's at the highest that it's been for a year. Also, 3 years. So you can see how significant 4.8 is when it comes to British unemployment. Last time we had that was back in June 2021. So it's like four year high, 4.5, something like that. So quite a big number. That's what I'm trying to say here. Okay, later today we have the Fed chair speech, which is the only major body, if you wish, that we actually get news. The Fed is not subsidized directly by the federal government, so it's not affected by the shutdown. So anything that has to do with the Fed, we still get data. All right. Tomorrow we have Chinese inflation rate. Important, yes. Not that important, however. It's good to know, but Chinese inflation tends to affect the markets when we get big surprises, right? So we'll see what happens tomorrow. For the time being, the expectations is that it will go up by 0.3%, going from negative 0.4 to negative 0.1. What's important here is that whenever we have negative readings on inflation, when it drags on for like 3 months or more, it's considered to be stagflation or even deflationary, which also adds pressure on the currency. But China is a bit different because China affects data coming from China, especially inflation or GDP or major news coming from China. It affects production related materials like silver, like gold, copper, crude oil. So Chinese inflation or Chinese data in general are not just for the local currency, but it also affects other instruments because, for example, China is the #1 consumer of crude oil. So Chinese demand on crude oil has direct effect on the price, right? All right. I see some questions in the chats. I'm gonna come back to it, guys. I'm gonna respond to that when we're checking on the charts later on. For example, what's causing high volatility in gold? We're gonna check on some data when it comes to charts. I will get to that. Gold, we're gonna go into too much detail about it. All right, because it's quite popular. But thank you for the question, Joyce Gitao. Thank you, if I'm pronouncing that correct. All right. Okay, on Thursday we have the British GDP. Again, it's for the month of August. It's the monthly data, not year over year. So the change is just 0.2%. Of course, when it comes to GDP, it's every single digit is important. But yet again, it's for August. We are already through midway of October. Not that influential, but again, if we see big surprises, it will increase volatility on the British pound and the instruments traded against it. All right, so we see the British economy is fluctuating between big spikes. For example, here December 2024, that was Christmas. It's only reasonable to expect to go up. Then we have February, March, and then went into negatives, and then big spikes. It's volatile. That's what I'm trying to say here. It's volatile. So any surprises on the actual figure of the GDP will most definitely create volatility. All right. Now, okay. So let's go on the charts, and let's start with gold. All right, so why do we have this big rally? Why do we have spikes in gold? We also, if you didn't notice, we also have similar on silver, where I'm gonna get into silver later on. So okay, gold. Gold is a safe haven. Central banks want to have gold on their balance sheets. Gold is the instrument when there is any kind of uncertainty in the markets. In this case, President Trump was, you know, putting on the pressure on Chinese trade tariffs. So this creates uncertainty. We also have geopolitical tensions around the world. Recently, we've seen how the Israel-Hamas situation looks like it's near the end. Fingers crossed. The peace deal is still holding on. Ceasefire is still in effect. We've seen how some hostage were exchanged, going back to their countries. President Trump went to Israel yesterday, and he went to the Israeli parliament to give some kind of speech and kind of confirm that the deal is going on. So tensions seem to be easing in Middle East. So gold is one instrument that is affected by many different reasons: geopolitical, UK external policy, US external policy, sorry, monetary policy, interest rates, stockpiles, inventories. Anything can affect gold. But the most effective one is hedge against uncertainty. All right, and that was what was created with President Trump announcing tariffs. Now it looks like he will be discussing with China. One day he's gonna meet President Xi. One day he's not. We just kept in the loop mainly through social or Twitter or anything. All right, so that's the why volatility is there in gold. Now, from the technical perspective, what we see here is that the bullish rally is indeed valid. It's not like the price going up, but volatility is not there to support it. First of all, it's been going on since late August, right? So we have an extended aggressive bullish rally, right? We see here the moving averages, these two lines here. Green line is the 50-day moving average. The blue line is the 100-day moving average. So I like to use long periods moving averages because I don't like the noise of the short period moving average. I like to see a smoother line with a clearer image. What I see here is that since the 50-day moving average, which is considered the faster moving average, is trading above the slower 100-day moving average, then that is indeed validation of the bullish trend. Of course, in this case, I don't need the moving averages to confirm that because, yeah, it's been going on since August. But in other cases, it's useful. In this particular case, not that useful. But again, I like to use moving averages, simple moving averages, by the way, not exponential, not weighted, not any other kind, just simple moving average, long-term period moving averages. All right. Also, what we see here is that the stochastic oscillator has been in the extreme overbought levels for more than 40 periods, 45, something like that, which is an extremely prolonged period of overbought conditions. If you were using a stochastic oscillator or RSI or MACD indicator or any other indicator that shows overbought or oversold, you would have sold somewhere around late August if you are following just this indicator. And that's why I say many times that just selling in overbought and buying in oversold, just using a single indicator is not the magic trick, right? because in this particular case, if you are just using an indicator to sell when it was in overbought conditions, that means that you will be selling somewhere around late August, and yeah, not good. All right, and the other indicator that I like to use is the Bollinger Bands. Bollinger Bands are I'm not gonna go into too much detail on what a Bollinger Band is. It's quite boring. But I like to use Bollinger Bands because I get a clear image of what's going on with volatility. When we have the Bollinger Bands, is the orange lines, right? When we have small squeeze here, like the lines are quite close to each other, that means that we don't have volatility at all, or very small volatility, right? So when you see here in this period, in the summer period, let's say, you see the Bollinger Bands are quite close to each other. So that's why we have a sideways movement. But late August, when we see an expansion of the Bollinger Bands, that's when we get big moves, right? Same goes here. We had a correction phase, then Bollinger Bands expanded, boom, correction phase, big correction phase to the upside. And that's the main point behind Bollinger Bands, is to show you when volatility is kicking in, so you brace yourself for significant moves. Does not mean it's gonna be bullish moves, might be bearish, but that's the point of the Bollinger Bands. All right, so let's see what's happening with big money, money managers, commercial traders on gold. When you go to commercial commitment of traders report, you can find that when you go to barchart.com, you select futures, commitment of traders, and then you select the instrument that you want to see. For example, you have here metals, gold, silver, platinum, palladium, you have crude oil, gasoline, and anything else that you want to check. The way to check it is similar to everything. So let me open here gold. Let me refresh here. Okay, it's not cooperating. Crude oil, it opens. Gold, all right, here we are. Okay, so what do we see here? Here is the price chart. All right, and then we have you can see, by the way, details here. When it comes to commitment of traders report, which is the left hand side, I don't really use this. I never, yeah. Anyway, commitment of traders report. Red line is commercials, commercial traders, producers, merchants. Yeah, big money, right? That's a fancy words for big money. The green line is speculators, non-commercials, and smaller players. And in what's that? Purple, we have very small speculators like retail traders. Okay. So what happens is when the price goes up, right? Let's go back here, find more. Yeah. So how I use commitment of traders report is whenever the price goes up, right? Commercial traders tend to move down. Why is that? Because commercial traders, let's say for crude oil, right? They want to, not just crude oil, just any instrument, right? They want to buy when the price is low. So when the price goes up, that means that commercial traders go down because there's not that much interest, because now it's more expensive, right? And it makes sense. But how do you use the commitment of traders report is that when you see, for example, over here, when we see that commercial traders go down, that means that the price is already over their desired level, let's say. So what that means is that we might see a bearish correction coming up, because if commercial traders, big money, money managers, fund managers, whatever, is not there, right? There is no significant volatility to support the bullish move, right? In gold's case, that might not be 100%, effective, because it's not just commercial traders that move the market, it's also many other external factors. But that's the main concept behind how to use commitment of traders report. So when commercial traders go down, that means they are not satisfied with the price of the specific instrument that you're watching. For example, let's take crude oil. Okay. You see, the price of crude oil has gone down, right? And commercial traders went up. Why? Because the price of crude oil is now lower, and there is more interest by big money to purchase crude oil, right? So yeah, that's how I like to use the data from the commitment of traders report. You can go into more details on what it is exactly and how do you use it. So sorry. Yeah. You can find out how these lines come up, how they the whole math behind these charts works. Too much detail. I don't want to go into too much detail here. I just want to explain you how I use it, right? Okay, so that's it on gold. Nothing much here to add. When it's going to be reversing, nobody knows. Is it going to keep going up for 40 more sessions? Again, nobody knows. Anything can happen. We might get new escalation in Middle East, for example. We might see that the ceasefire deal does indeed work and the war is over, and then all focus will be on Russia-Ukraine, which is the other major conflict here around the world. So anything can happen. Any external factor might come in. President Trump might want to tweet something that has to do with China, so we will see another spark in the price. Nobody knows. What I know is that it's quite difficult to time the market. Almost nobody can do that, right? If we knew how to time the market, yeah, we will all be rich. So it's very risky to trade when an instrument's price, especially gold, is in a new all-time high, right? So not very wise to jump in. I tried to find some short positions around the 4,000 because, it's a new all-time high. 4,000 is the psychological resistance of the round number. We have extremely overbought conditions on the stochastic, but I failed because maybe I caught some profit when it went down to 3,950, but as you can see, yeah, it just continues pumping to the upside. I really thought that 4,000 would be at least some correction, but yeah, nothing too major happened. So yeah, too difficult to time that, too risky for me. Not gonna deal with gold anytime soon unless I see a major bearish correction happening here. All right. Okay, let's move on to some other instruments. Let's check on what's happening on crude oil. Crude oil, we have a big sell-off happening. Let me explain what's happening on the chart. You see too much lines, too many colors, right? Okay, the red channel here was the sideways movement of the price of crude oil for the past couple of months. It's been trading between 65 and 62. The area of 62, it was a very significant technical support because we have multiple retests of the price, and it failed to break below until last week. Okay, so I was really confident on the support of 62, but we have the easing of tensions, geopolitical tensions, and some Chinese data that show that demand might be going down. We also have seen recently how the OPEC Plus has increased production of crude oil in general. So we have extensive supply and not enough demand to cover for that supply. So price goes down to increase demand. All right. So what happened was the sideways channel broke to the downside. It's pumping quite aggressively to the downside, mainly because of the geopolitical easing, especially in Israel and Middle East in general, because it's not only Israel and Hamas. We have other countries involved in trying to figure out a solution to the problem. Okay, so it broke the channel to the downside. Currently, it's testing the support of the Bollinger Bands. You see here the orange line, Bollinger Bands, and also the stochastic was pushed to the extreme oversold levels. Right, we see here the stochastic being pushed even below 10 points, I think. Yeah. Okay, so what now? I am personally more biased to the upside, long positions, but I'm not gonna open anything unless I see some retracement to the upside. And when I say retracement, I like to use Fibonacci retracement level here. You can find that on your Exness platform on the left side here. Okay, so the way I use the Fibonacci, let me make it yellow here. Okay, Fibonacci retracement is some major levels that we can use as support and resistance. Basically, how you draw the Fibonacci is more important than the actual Fibonacci figures, because you need to draw it correct to get the accurate figures. Okay, now personally what I want to see is for the price to make a valid break above 60. Right? Why 60? Because it's the combination of the 23.6 here of the Fibonacci, and 60 is a round number, which is a psychological resistance. Right? Round numbers always act as support and resistance area as well. So I want to see a valid break above 60 before I initiate any long trades. And when that happens, and if I decide to proceed with that trade, my first target would be probably around 62, because yes, it was a significant support on the price before, but now it acts as a resistance. Still quite a strong level, but in this case reversed. In this case it's a resistance. All right. Yeah, that's my take on crude oil, and also checking on commitment of traders report. Going back here, what we see, we already talked about this. Commercial traders are near yearly high, not near, it is yearly high. So yeah, that means that we will have, demand kicking back in, because now crude oil is so much cheaper. Also, what I wanted to mention about crude oil is that we have the short-term energy outlook. That's how to call it? It's like a chart of what's the fair value, the expected fair value by the American Energy Association. Okay, so what we see here is that in the last quarter, let's say, of 2025, the fair value, let's call that, of the crude oil is somewhere around 50 something. It's not, pinpoint accurate, it's just approximations, right? So in the last quarter here of 2025, crude oil price, the fair value might be somewhere around 50 something. All right, and that's what we see here. Probably it will reach somewhat lower, around 56 or 55.5, which is also the medium-term low here in early May, right? 55.5. somewhere around here. So if it reaches 55.5, I will be paying close attention to try to catch. Very difficult, very rarely happens, but I just like to challenge myself to catch the dip on crude oil, especially when it goes to 55, which is the fair price by the Energy Association. Okay, let me check. Let me check the chart real quick here. Okay. Okay, high volatility in gold. We talked about that. How does our price? What's your take on pound, Aussie dollar? We can check that. Can share your thoughts on silver and Bitcoin. Yep. Gold, we already seen gold. Okay. Okay, so that brings me to the next instrument, right? Bitcoin. So what happened here in Bitcoin? We've seen the price reaching the all-time high above 125, probably 126, but that was intraday. It was not an official close, but it reached the new all-time high. And what happens when any instrument reaches a new all-time high, apart from gold, right, is that we have a lot of profit-taking activity. That means that traders or investors or market participants or fund managers, anyone who bought Bitcoin, let's say around 110, it's taking their profits in 125, obviously. But since it was an all-time high, that profit taking was multiplied by a lot. And that's why we see this correction to the downside. Bitcoin, because it's traded against the US dollar, it's also affected on US data. New tariffs to China also included, so that also played a role. But the majority of it is profit taking, right? Traders or market participants in general were closing their positions, taking their profits on the new all-time highs. That pushed the price to the downside. Then we had tariffs kicking in that pushed the price even lower. And now we see some small gaining back of the big sell-off. Of course, today we also have another bearish pushing the price to the downside, another bearish candle. So what I like to use when I see when I trade crypto is the Fibonacci, because it simply works. Okay, so what I have here is that is a Fibonacci retracement of the longer term, right? But I like to use two Fibonacci retracements, and the combination of it is the major support or resistance areas on the chart. Let me make this black also. Okay. Yeah. Okay, so what I see here is that the current level around 112 is the combination of the 50% of weekly and 78.6 of daily. So that is a very strong technical support level, right? So in this case, I will wait out to see how the price will react in around 112,000 before considering opening any positions. Because if I see further push to the downside, that means there's something else kicking in. Then we have some catalyst. We need to do some digging around to see what's happening with Bitcoin, right? So for the time being, I'm sitting this one out. But what we see is that Bollinger Bands are quite expanded. That means volatility is there to support any significant moves in the short term, right? Stochastic is in neutral levels. We don't have any overbought or oversold conditions. That means that it's perfectly possible to have significant moves to either direction, right? We don't have saturated conditions. We have volatility to support significant moves, And we also have the moving averages being very close to each other. Currently, the 50-day is trading below. That's technically a validation of the bearish trend, which is mainly the big sell-off that we've seen here last week, and also the correction that happened in mid-September, because don't forget, it's 50-day moving average is the last 50 sessions coming into play. So the recent bearish corrections that happened here in mid-August and late September, and also the recent sell-off, all play a role on the formation of the 50-day moving average. All right, but again, I'm waiting to see the price, how it will react in around 112. Actually, okay, this is a demo account, but I also opened a small position here in late September, again around 112,000. Again, this is a demo account. This is not a real. This is not. I'm just telling you what I'm testing, right? So the area of 112,000 is was quite interesting before. It is quite interesting also now. What my take would be here is that if I see some correction around the 112, then I will be considering opening some long positions. Probably first target might be around the 119,000, which is the combination of 23.6 and 38.2 of weekly and daily Fibonacci respectively. But on the other hand, if I see further push to the downside, I wouldn't expect the price to go significantly below probably 109,000, 110,000. So that's why I'm sitting this one out for the time being. I want to see how the price reacts to the current level, and then open any trades. All right. What else we have? Let's check on silver, and we'll go back to pound Aussie dollar. Okay. Silver, I have yeah. Sorry, give me a second. Okay. Now, what's happening with silver? We've seen it's a similar setup to what's happening with gold, right? We see bullish rally, no signs of reversing anytime soon, prolonged periods of extreme overbought conditions, moving averages validating the bullish trend, Bollinger Bands expanded. So almost identical setup as gold. Now, but we've said that gold gets affected by all these external factors, so why is silver behaving the same? But one of the reasons is that traders want to diversify their portfolios. Gold is quite expensive, so the next best alternative is silver, right? Also, silver has limited supply for the past, I don't know, probably 3 years. It's going on for quite some time. So supply is limited. Demand was not that high anyway for silver. So one canceled the other, and we didn't have, big sparks or any, significant moves on silver. But recently we have also demand rising, and in combination with limited supply over the years, we have this spark in the price, right? Why is demand rising? Because anything from electronics to electric cars to solar panel, microchips, and you name it, has silver now. So this demand was building up, supply was kept limited over the years. So yeah, simple supply and demand. Also, it's a production related instrument. That means that we get silver in almost any section of the production line, and also parts. So again, production related, boosting demand. And we also have, this to a smaller extent, we have the Indian buyers preparing for wedding season. So again, another boost on demand for silver, when usually this was sparking demand for gold. But since gold is so expensive, now buyers shifted a little bit to silver. So as it goes with gold, same goes for silver. Near all-time high. Not personally not interested in opening any trades on silver anytime soon, unless I see any bearish corrections or a candlestick formation, let's say on lower time frames, to even consider opening any trades on silver. And what else do we have? Pound, Aussie dollar. Do I have it open here? No. Okay. Pound, Aussie dollar, we've seen how we have British data coming in. The GDP, unemployment, okay, we already got that. But publication times on currencies that have something on the economic calendar coming up, it's something that you need to pay attention to when you're trading the so-said currency. All right, so what we have here, we have a bearish correction followed by some sideways movement here, and now a spark to the upside. To be perfectly honest with you, I'm not tracking pound Aussie that often, so I'm not quite sure what's happening here, but we're gonna check it on the technical perspective and try to see how we can find something to do with pound Aussie. All right, now what I like to use when I have big rallies, as mentioned before, is Fibonacci's, right? Why? Because usually it tends to work, so that's reason enough for me. All right, so what we see here is that the recent bullish correction to the upside has significantly found sufficient resistance in the dynamic support, in the dynamic resistance area between the two moving averages. Dynamic is a fancy word for the space in between the moving averages, right? So dynamic resistance has pushed the price to the downside, found support on the 23.6 of Fibonacci, as we can see here, and is currently testing again the 38.2% of the Fibonacci. Purely out of technical analysis perspective here, what I will do on my demo account, let's say, I would wait for the price to close below the 38.2 and then initiate some long trades with the first target probably around the 2.05, which is the psychological support again of the round number, and the second target, potential target, might be around the 61.8 of the Fibonacci, around 2.07, probably 69.7, somewhere around there. So when it comes to massive bullish or bearish correction, it doesn't matter, as long as it's a continued decline or incline, right? Moving Fibonacci retracement levels tend to be more efficient, right? When we have big, sharp moves, the price usually but not always, tends to respect Fibonacci retracement levels. All right. So let's check on some earnings coming up this week. All right. So what tool do I like to use when it comes to earnings is Nasdaq.com. Everything is there. You go to market activity and then earnings, and then you see what's coming up this week. So this week we have major banks releasing their earnings. We have JP Morgan, Wells Fargo, Goldman Sachs, Citigroup, and we also have Bank of America on Wednesday, Morgan Stanley. What else in terms of bank? Charles Schwab. Yeah, I think that's it from major banks. But my focus is on this Taiwan Semiconductor Manufacturing Company, TSM. It's a big company, 1.4 trillion market cap. So yeah, is the biggest player in the semiconductor industry. So whenever they have earnings, I tend to pay attention. Let me bring up the chart, the daily chart of this company. Yes, and now you see why I like it, because Fibonacci. Steep move to the upside, bearish correction to the downside, bearish correction to the downside, and now we're back up. So I'm just keeping an eye on any reversal, and my targets might be around $275, which is the 38.2 of the Fibonacci, and also the medium term low here in late September. Now, what I like to do when I find a company that comes up with earnings, I like to see their financial image per quarter. Come on, per quarter. No financials, okay. Let me try to find it elsewhere. What's it called? Macro, not Macron. Wait, let me find it. Give me a second, sorry guys. In the meantime, if you have any questions, please feel free until I find what I'm trying to find here. Okay. Macro trends, not macro guru. Okay, so what I like to see, to check on individual companies, when it comes to individual companies, right? I like to see their current ratio. Come on, current ratio. Come on, what's happening with the cookies today? Okay, current ratio means when a company can repay its current liabilities with the current assets in hand. Why is that? Because current assets are more liquid, are more easily turned into cash to repay any short-term difficulties that the company may have, right? So current ratio needs to be above 1. Anything above 1, that means that the company has 100% ability to repay their current liabilities, right? In this case, the TSM has 2.37. That means 237% ability to repay current liabilities. What that means is that the current assets are 237% times more than the current liabilities, right? So a financially healthy company has a current ratio above 1. Okay. Now, the other thing I like to check is long-term debt compared to total assets. Total assets here is 227 billion. Long-term debt is just, come on, it's just 29. So and we see that it has a declining trend on overall liability debt, right? That means that total assets of the company are increasing, are going up. You see 23% increase year over year. long-term debt has a declining trend. That means that debt is being paid without affecting the value of the total assets. Usually that tends to be from cash in hand. We see here cash on hand has an increase of 35%. So cash is coming in, debt is being repaid, and current ratio still remains quite high. So why do I mention all this? Is because that's how you see the financial health of a company. Does it have the ability to repay any short-term difficulty that might come its way? Does the debt goes down? And if it goes down, is it going down because they are selling out their assets, or do they have cash coming in and that's how they are repaying their debt? So in this case, the TSM is very healthy financially, right? So and that is reflected on the chart, right? That's what we see, overall bullish trend for the majority of 2025. We had some period here in the beginning, but after that we have increase in their share price. So why do I mention all this? Because when it comes to earnings, we get an updated financial picture of the company through their financial statements. You don't need to be an accountant to read. You just single out some what you want to pay attention to. I narrowed it down to current ratio, total assets, total liabilities, and debt going up or down. By the way, every single company has big debt. It's not an individual that needs to repay it. If you see debt going up, that means that the company might got a new loan to finance, I don't know, probably research and development or the launch of a new product or something else. So debt going up is not necessarily a bad thing when it comes to big companies, right? Okay. So I think that's it for today. Let me check the chat. Let's see if we have any new questions. No questions. Okay. All right. So last thing I want to mention is you can follow Exness on our social media, Instagram, X, YouTube, you name it, we are there. Just search Exness on the search bar and you will find us. We do weekly podcast videos and also weekly market outlooks where we analyze a specific instrument to see if there is any potential for an increase or a decrease in its price. We analyze what's happening in the market that affects the specific instrument. That's the market outlook. It's a trading idea every week for potential trade. Okay. And also we have our podcast, Exness Trading Talks on YouTube. You can check to find out some more details of specific concepts, let's say. Okay, we also have the Exness X account where we post updates on market data that comes in, for example, the NFP or US inflation or anything major that's happening in the markets. And we also have our YouTube channel and Instagram for you to take a look. So give us a like, search for Exness on any social media platform and you will find us there. Give us a follow, we really appreciate that. And I think, yeah, you can also find my personal X account on X. You can follow. My name is Antreas Themistokleous. You can find that on. Yes. This is my profile. You can. I also post some articles, my personal analysis that I do on different instruments there. So I think that's it. Thank you all for joining us, and hopefully we'll see you same time next week. So, yep. Take care, everyone. I wish you successful trading, and see you all next week.